Many, many years ago in a land far, far away, back when I was in Boy Scouts, we used to sing this song that went, when you're up, and when you're down, and when you're only halfway up, you're neither up or down. And really that's kind of applied to the grain markets lately. Last time you and I chatted a couple weeks ago, the grain markets were on their way up, but it's not that way anymore.
Well, if you look at the last couple of weeks and actually the last couple of months, grain prices have just continued to fall. You know, they stabilized and wiggled around a little bit, but corn prices were down this 20 cents in the last 2 weeks. You've got new crop corn about $3.55, milo around $3.40. Soybeans were down 45 cents over the last 2 weeks. New crop beans, you can forward contract somewhere around $7.80. Wheat's down 60 cents. Over the last 2 weeks. Oklahoma, using Burlington as an average, around $5.40. You can look out at 2019 new crop for $5.60.
So really what's causing all this decline that's been going on so long?
Well, if you look at corn, on the production, you're looking at near record 41.8 billion bushels of corn production. We had an average of 40.1, so above average corn production. You look at the use, 43.3 billion bushels, average of 39.6. Stocks to use ratio on corn 14.1%, average is 20.1, so below average stocks to use ratio. And if you look at the U.S., 11.2 stocks to use ratio, average 12.7. So yeah, I think corn prices are going down because we got a big crop coming on, but I think there's some potential there because those stocks to use ratio are low. You look at soybeans, the same thing. Now you got record 13.5 billion bushels. World, you got 4.6 billion bushel record U.S. Old record was 12.8 and 4.4, well above average 11.8 for the world, 4 billion for the U.S. So you got high, very high production. You look at the ending stocks going from 430 million bushels to projected 784. So you'd expect soybean prices to be lower than that with that much more production.
How is that impacting the price of wheat and the futures of wheat?
Well, I think that right now that you look at corn, and of course I don't think beans is connected to wheat at all, but corn and wheat, I believe they're separated. They might not be divorced, but I believe they're separated because we're short of milling quality wheat, and the market is buying wheat for food rather than feed. And so I think the wheat prices, plus you had wheat prices going down 60 cents with corn only going down 20. If they were together, I think those declines would be closer.
Last year there was a big push for quality wheat, for the protein in the wheat. Did we see that, and did it really make a difference when it came time to marketing the wheat?
We did see good test weight, around 61 pound average, 12.5, 12.8 average for the protein, depending on where you are in the hard red winter wheat area. You go back to December, January, the price of wheat in Oklahoma was $3.50. You had a minus 80 cent basis underneath. We got into harvest, our basis was a plus 20 to 25 cents. You know, that's $1 and a dime increase in the basis. Our price went to $5, $5.50 here recently, up close to $6. You bet we had a premium for that milling quality wheat.
What are you looking forward to in the next couple of weeks as far as the wheat prices go?
Well, as you look at wheat prices, they'll probably waller around as the northern hemisphere crop is wrapped up, and we see what Russia and Ukraine and the former Soviet Union countries, the European Union, Germany's had problems, Australia's had problems, Argentina's coming on. As we get a better handle on those crops, I think our prices will stabilize. And I think we're going to move higher to higher prices both now and as we look at next harvest. Reason I believe that is if you look at production to use, we're going to use more wheat this year than we produced. Both on the world market, both in the overall all total wheat U.S. and for the hard red winter wheat market. You look at hard red winter wheat ending stocks projected to decline from 581 million bushels to 417. If we didn't have protein and test weight wheat in the bin starting this 18 harvest, and we're going to use it all, and plus some of that poor quality wheat, how are we going to have it next year? We're not. If we can produce protein and test weight on the 19 crop, we're going to have $5.50 prices, maybe even $6. And if we lose Australia and maybe some of Argentina, we could have $6.50 or $7 prices. If the southern hemisphere crops don't come in as high as projected right now, prices are going to take off because The Ukraine down 28%. Former Soviet to Russia down. They don't have as much wheat to export this year as they did last year, and the world's going to needs our wheat. And if we lose any crop at all now, our prices are going to take off.
So that sounds very optimistic for those producers that are sitting on some seed wheat right now. They're not sure if they want to go forward with it, but it sounds good.
Oh yeah, I think the market's looking positive right now. Can we go lower? Yeah, we can keep walling around a little lower, but I think the long haul, you got to be optimistic relative to prices.
Okay, thank you much, Kim Anderson, grain marketing specialist here at Oklahoma State University.